The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Well, good morning, everyone, on this 4th day of May. My pleasure to be here. Great programming. Don't forget, Tom O'Brien has a webinar coming up. I believe it's Sunday night. This is after the election results in France. Should be outstanding. So we're looking at a Dow right now, down about 28 points, 20,930, S&P fractionally unchanged, 2386. Hey, this is going to be very interesting. Composite index is down 1 at 6,070. The VIX index has rallied just 2 cents, up 10 at 10.70, still way under the teens. And what I'm looking at here, the E-mini is up $1, stuck. Look, this is the 6th session in a row. Let me just move this to the right here. This is the 6th session in a row of sideways move without breaking above the 2394.75 level. If anything happens on Monday that the market thinks is positive, will we get another gap up like we saw and just spiral right into new highs? Dow goes to 21,170 for an all-time high. S&P breaks in the 2,400s. I don't know. I'm not sure the results are going to make all that much difference. We're really looking at the patterns, and the pattern says when you take too much time to break out of the left side lip, in this case 2397.25 in the June contract, the weekly chart, and the MACD is still negative, and the stochastic has turned up, but it's still under 80%. It's at 72%. And you can see, look at this. If I show you the 120-minute chart, look how long we've been in this kind of a rectangle trading lane, a little spike above it to the 2394 area. I could even put it all the way back there to the 2389. So between 2389 and 2380, except for a couple of 3 brief occasions of breaking once to the upside and twice to the downside, we've just been in this range, kind of a waiting game. But very often a waiting game takes you, it usurps much needed energy for a move to the upside. So I'll talk about it in a moment. Let me just go on because I want to get to a couple of charts. I want to show you that the IWM, that's the Russell 2000, downward, that has been making downward trajectory all the time. It's at 137.94, down 36 cents. Peak D, absolutely certainty by tomorrow, Friday, unless something spectacular happens to take it to the 142s. There would be 4 points up from here. I'm not sure we could get it 4 points up. And the 120-minute chart's gone to that peak D. All I can know, peak D means in the Chapman wave methodology, we like to get to Ds. This is very unusual to go to an all-time high and probably failure to see there's no other way I can count it. But if you're looking, at the XMI, which is the Dow is very much like this now. It's a much broader, even though it's only 20 stocks, it has a much broader ARCA major market index trading at 21, 23, 70 down $1.71. The range of the 20 stocks within it is really quite broad. And the Dow is getting to that. I like the Dow makeup at this point. And I think the Dow makeup, although it may be 5 financials is too many, there's a big difference between MasterCard and Visa in their makeup. And there's a big difference between a Goldman Sachs and, say, Bank of America at this point in the makeup. But those are 5 financials, and that's going to have a big impact when the financials, XLF, finally gets back on track again. All right, so let me just show you that the gold contract was down very sharply earlier on. Where did it just disappear to? Let me get it again. GC, which is the continuous gold contract, down 18 at 12.30. Remember, we've been in a down mode in the daily for some time, and we've broken key support levels. The next support level, well, we haven't closed. But if gold, see, what could happen is tomorrow there's kind of a meandering day. Everything just stalls waiting for the announcement on Sunday. And Sunday night, either you get the surprise factor where the media is totally wrong and Le Pen gets in, and who knows what the market could do. If it's to the downside, it could be very sharp. Maybe McCain gets in, and the market has a kind of, okay, phew, but that's all it has, is just a few, because other things have to happen as well. I don't know. All I can say is that I can't say I feel 100% comfortable, but I feel pretty comfortable having gone short again the Dow. We're short another instrument, one of the sectors. We have two longs. One is actually up over 5% just today alone, which is nice. The other one's kind of meandering, so it's up and meandering. I'm just thinking, you know what? Let this play out, because for me, we're already in the sell mode. If we continue downward and finding the QQQs, and I'm going to go to that right now, the QQQs catch up, that's going to be very important. So let me finish up here. I've got crude oil. I was asked a question about left side, right side price. Is there a time match? Is there a low that we could look at? And all I can say is the daily made that uppercase A. Remember, I'm all about chart patterns that repeat over and over and over. Market goes only three directions. Either it goes up, it goes down, or it goes sideways. But the patterns are 5 patterns. Up is either up and down like an A pattern, straight up, straight down, or it's an arch formation, and the other way around, it goes in a cup formation or a V-shaped formation. So you either got the cup or arch with a modification in either case, or a straight line, and a straight line could be up or down. So it depends on your time frame, or you could consider it's going sideways if you're looking at a larger time frame. Look, crude oil has gone sideways if you're looking at the weekly chart. If you're looking at the monthly chart, it's got the lowercase h to a lowercase m, which suggests it's going to take out this, or test, I'm going to say test, the low that was made the week of the 18th at 45.92 in the continuous contract. But the MACD and stochastic in the weekly charts are still very negative. So we might find that on Sunday night there's a trend change. And most of the time the trend is already in place. It's just a trend trigger to continue that direction. For crude oil, gold, and bonds, that would be different. There could be a trend change on Sunday night if there's a massive move on Monday where these the gold dollar pulls back, gold goes flying higher, crude oil goes flying higher, and the VIX index, who knows, goes sharply higher. Market comes down, or it just continues. So I don't want to say anything other than here we go. The TLT, this is the one I want to look at. TLT has made that pattern. It's going to be really important. I said it must hold the 120 level. It's at 120.92 right now. If it closes if it goes to the 119s on Monday, we're looking at something different. Than bond yields are going to go quite a bit lower, and this is going to be very important. And what I wanted to show you here was the reason why I thought there could be a bit of a rally is that in the 120-minute Dow chart based on the Chapman wave methodology, we did do a 5 to the downside as well as a D, and that said, hey, you can get a nice little bounce to the upside. Well, we've gone to a leg B, but B for but, the one on the right with the stochastic in the MACD, that's going to be the test of that 9-period moving average, which is absolutely critical. I'll be back. Basil Chapman, Tiger Techniques Hour, and the Dow's down 35. S&P's now a little bit negative. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. So we're looking at the 2-minute chart. It's made an arch formation, made a peak E way back at about 7 o'clock this morning. Just kept coming down. Tried to test the 200-period moving average, failed. That became resistance, that green line. And look what's happened. And then we made a left side, right side V-shaped pattern, rally to a peak B minus. Peak B. Right now, it's still in force, but we do have a gray peak A right there. I'm suspecting that we're going to have a little bounce around. Just got to be real careful that at some point by just about noon, there isn't a sudden slide below 2382, because that'll test the low of the day, 2381 or 25. So this bounce has to take it above 2384.75 very quickly and then hold steady. So this is that's just a quick look at the 2-minute. The 10-minute chart has made that H pattern that we always talk about. A couple of techniques involved here, but most importantly, I want to show you how many times in this 10-minute chart over the period of since 10 o'clock on the 2nd. This is just a 10-minute chart. Look how many times we've come and retested this area. So that makes support in the, let's give it a number, support in the 2381 area, a holding pattern that is, very, very important right now. Okay, a couple of things I wanted to talk about. Let me just see, we've got questions, but first I want to deal with what I spoke about yesterday because I consider it to be really important. The QQQ series made, right there. The QQQ series it's fascinating because it made a peak G/C. I thought there was a chance that today we'd have just one pop to the upside above 137.19. Whoops, 137.49. That should be a 4, sorry. 4 right there, 137.49. Just to get to a D, just clarify it for me. The MACD is still very strong. Stochastics are very strong. There is still enough internal support in the Now, in the QQQ series, the power shares for the NDX 100, to say we could chop around here. We might not have much on the upside, but the 135.94 9-period moving average, that's going to be absolutely imperative to hold if there's any weakness going into Monday's trading day. Now, what I wanted to show you is yesterday I spoke about this. I even mentioned it with Tom when I was interviewed yesterday. BEAT, which is This is Biotelemetry Inc. remote heart monitors. And what I said, I shown to my subscribers of my opening call. There are times where I put chart formations because I treat my newsletter as an educational vehicle. I couldn't tell you how many emails I get. Is this a D? Is this a, what is it? What are we looking at? Where's the left side, right side, price, time match? A whole bunch of things like that. But most importantly, what I was looking at is I spoke about this. I said there was a 34 round number high on Tuesday, and it was a leg D. And although I would have technically wanted to short, I just wanted to treat this as a learning experience, how we can use technicals, because the earnings were going to come out tomorrow. The earnings were going to come out yesterday, and there was no candle here. So this is what I showed right up to there. During the day, we got this candle, and what I'd said that earnings are coming out tonight. And from everything I'm looking at, using one of the techniques that I developed back, I used it for ages, but back in the crash of 1987, it was just a phenomenal way of saying smart money was buying up everything they could at round numbers throughout the day on the crash Monday, October the 19th. There were stocks opening up at a round number, gapping down at a round number, then plunging. When I say plunging, I'm talking about intraday. Some of those stocks plummeted 30 to 40% or more. And at General Motors, I can't remember. I got it somewhere, but General Motors must have gone. It opened up. It opened down at about, let's just say 44 or 55, and then it plummeted to around number 42 or something like it, 44 if I remember correctly. And then it closed a little bit off the low, but it never, that low to me said, some people were just throwing in bids and saying, get me out, get me out, get me out. And nobody's going to say 44 and 3/8. So it was during a time period where we 8s and 16s, 8s, just 8s. They would have said 34, 55, 20. And you saw Eastman Kodak, you saw all these stocks with round numbers. So over the years, I've developed this technique that says, watch round numbers. See, here we are. We've got 34 round number in a stock that's gone parabolically higher to a potential leg F in the weekly, a potential peak F in the weekly if it drops and there's no new high next week. And a leg F, you're going to wait all the way through to May, June. You have to wait all the way through to June because it made a new high in May. It was May, right? Yeah, May the 2nd, all-time high 34. So you have to wait all the way to be able to say there's a lower candle. And that means you can't do it in May. No matter where it goes, it could even drop down to 5 from the high round 34 number. It doesn't matter because you have to wait for the next candle to form. Of course, if it anywhere in the 28s or lower in another couple of weeks, I'm going to say there's no way that this thing's going to go to 34 in May, and that there's a real good chance that we can be already talking about the whole of June with no new high. But this was number one in the Investors Business Daily top 50. That was my point. And my point said the reason why I don't really want to short it is I prefer to short the higher price stocks. It gives me a little leeway. I like to put a 2-3 point stop in. Doesn't matter what the price is. Well, I don't want a 2-point stop on a $34 when if the news was fantastic, it could have gapped up. Could have gone to 37, 38, and I'm just stuck. So I had no question. I didn't want to. I was going to suggest buying a put. I do so many things. I couldn't add another thing to the roster. I take just so much time for every daily newsletter. So look what happened. Number one in Investors Business Daily, it goes from 34 3 days ago to the low today of $26.50, trading now at 28, down $5.20. Problem? I think there is a problem. Was the beat for beat good enough? I don't know. Remote heart monitors, believe me, people this morning needed the remote heart monitor. That's not a good sight to see if you got in late. If you got in anywhere in the last 2-3 weeks, you're not looking pretty right now. Okay, I wanted to show that, and I wanted to show Facebook. Facebook trading down 56 cents at 151.24. Made a leg E, probably a peak E today if this is the correct count. Otherwise, I could start it fresh and say this is E/B. I should have put that in. I'm sorry. E/B. We don't know yet whether it's going to pull back. But this candle, this doji candle, is going to give me a wealth of information Monday and Tuesday of next week if by tomorrow you don't take out the high, because that'll extend it and make it a different kind of pattern. So I'm watching Facebook. It's a fantastic company. I think there's a little issue now. I know my son said, and this is the whole field that he's in. He said, I don't use Facebook much anymore. I use one of the other mediums within Facebook. But actually, Facebook, most of my friends are not doing that either. And I'm hearing that across the board. So it's a great company in changing itself. It reinvents itself very often. We'll see how it survives here. I'll be right back. Basil Chapman, Tiger Technicians.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So what I'm doing, guys, I'm showing my CD introducing the Chapman Wave methodology by Basil Chapman, chart analysis in the stock market, and there are 27 something chapters. if you go to chapter 17 where it says the dreaded H pattern, I think this is something we're going to have to get used to over the coming weeks. It talks about the pattern that forms after D, E, or F at the top, and it pulls back. And then it starts and it tries to have a rally and it fails. And that rally, you'll see with the red line, looks like a lowercase h. When that lowercase h takes out the left side low bar, it can go quite a bit deeper. That's what we were looking at. Crude oil. I'm going to get back to the crude oil. I just want this as a preamble beforehand. And then you can get another one, but at a certain point, you can get a larger arch or even the lowercase h that goes to a lowercase m. The rule with that is if it takes out the left side low bar, that's the original left side low bar, and closes under it, that means one thing. If it closes above it, then what happens is you can have a good rally towards a 9-period moving average, a moving average of importance, or a left side peak of importance. So let me go back to the reason why I was speaking about this. First of all, here's the 2-minute chart, and there's that H pattern, there's the arch, and now you come down, there's the lowercase h that goes to lowercase m. So what happens here is very important, because if it doesn't take out or if it holds above the 2382.50 level, it could have another bounce and go towards back up again, and this time it would go towards that left side peak right there of 2385.75. If it suddenly takes a dive from here, be careful, because it would have, well, I'm going to be able to move this now because I finally got some, decent, there we go. So that could take you to 12, no, it's not 12 anymore, it's later. That could take you to about, 12 to 12.10 with a target of this left side low bar of 2381.25. Okay, so that's the pattern. I wanted to show it there. I wanted to show it also because within the context of the markets that we were looking at, when I showed you the crude oil, CL, oh, I didn't hit the right key. Okay, there it is. CL, the long-term chart, you've got yourself a very interesting pattern here. Look, an arch formation is forming here. It actually is a little mini h to lowercase m pattern. You can see it. So that's the reasoning. It doesn't. I was looking at a 2-minute chart, right? Hey, wait a minute. This is not a 2-minute chart. This is what's called a monthly chart. How many 2-minute charts are there in a monthly chart that goes back to February of 2016? Oh, I would say a few. But it's the pattern, remember? So that's really what's very important. So we are very close to the support that's important on a short-term basis on the weekly chart. That was the question I had. So I wanted to go through that, and that's why Monday, if there's a real fear factor and the market just gaps down sharply for whatever reason, I don't care what it is, then we might see gold become, once again, a harbinger of fear. What is happening to gold? Gold is getting very close. No, wait a minute. It wasn't this chart. It's the daily chart. It's just taken out this left side low of importance right here, but it hasn't closed. So going into tomorrow, we're going to see what happens, because this whole area here with the stochastic down at 13%, 13% says it's getting close to trying to rally, but that could fail and then go to single digits. So this is going to be so important for the dollar, for our four elves, VIXI, Bondi, Goldie, and Dolly. I mean, this is what we're going to see happen on Monday or Tuesday. And if, in fact, the market spirals to the upside again, I just don't know how, if you look at the QQQ series, how on earth we could treat this monthly, even the weekly, maybe a little bit more. I can see it with the daily going to the 138 to the 138.70 area, maybe. Wow, I just don't see. Without a period of rest, it'll be. I would not like to see this go much higher, because that'll harbinger a really poor late summer sell-off. Okay. So the next question I had was, GT wants to know about CAT. Let's go to CAT's Caterpillar. So it had that peak D right there. Remember, what is the objective in the Chapman wave methodology? I don't know if I can do it right now. I'll try. Objective in the Chapman wave methodology is to get you on the upside to at least a D. Today, right now, we've got a D in one of the stocks that we have, a lower price stock. We got it 21.50 something, I think. That's what it was. Now it's at 23. I don't know what it is. 23.05. Up very nicely. D is what we want. Let me just show you something here, if I can. Oops, I don't want to do anything dramatic. Right there. Okay. Oh, I have to move right there. Okay, I've got it. There it is. So this is the pattern for those of you new to my work. Objective, find the lowest low bar, merely count each successively higher peak until you get to D. At peak D, the fourth highest peak, other things can happen. It can continue higher. It can have the deepest correction. It could go sideways, but D is what you want. D is when you reassess. And the easy part is kind of done. Okay, so here we are. Caterpillar does what? It goes to a peak D. And it gaps up. When stocks gap up, and within a day or two they make that D, I'm always a little nervous. So what has it done? Remember, we were talking about Caterpillar trading at 98 down 256, making what I call let's call it a pregnant stalk leg formation. Look at that. So it's gone to the D. The D says it should go back and retest the 98. It should test the 98.90s breakout, and it's at 98.90s right now. So it's almost accomplished what the stalk leg formation sets out to do. And it's a leg D in the weekly. That's the reason why I'm kind of cautious on the Dow and the S&P, and I'm just waiting for the cues to start their catch up to the downside. And it doesn't mean to say we have to crash or anything. It just says this is the period to be cautious. Fewer and fewer stocks are participating. So that was Caterpillar. And the next thing is WFC. WFC just made a leg. That's an E right there. Oh, oops. Okay, so it's gone to a leg B. A little gap up to a B. Wells Fargo at 55.18 up 33 cents. So the question is, nice question. The question is, WFC and C, good for long as 2 to 10 years. Your spreads widen again. So let's just go to our spreads. We're going to go here. So we've got the long-term chart right here, the long-term weekly chart of the 30-year, the 10-year, and the 5-year interest rates. And this is a nice move to the upside. It's up 8.59 cents. So I mentioned yesterday that if there's a turn, it has to turn right away because you want to make it a double cup pattern on the right side. You want that cup. And this is much lower, and this is much lower. So there's quite a way to go. So I think what I want you to do is just to go to it in real time. So let's go TNX, since the 10-year is really what most of the things are keyed off. Wow, the 10-year looked exactly like the Wells Fargo chart a moment ago. Huh. We've got a break coming up. Oh, good. We've got time. I've got a break coming up. I'm going to do a little bit of work on this on the TNX and put it in conjunction with Wells Fargo. Maybe, let me see what the XLF is doing. XLF. Ha! All right. We'll talk about the banks and the bank stocks when I get back. Basil Chapman, Tiger Ignitions Hour. Dow's down 19. S&P's with $1.50. Another divergent sum.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So here's another pattern that I like to look at. It's the inverted H pattern. Looks like a Y backwards. And it's what I call the drop bucket pattern. Why? Because the backhoe comes and it lifts up all the gravel and opens the bucket and everything falls out. Okay, I like the visuals. It's really a double top pattern. So this is the pattern we're looking at right this very second. Oh, I should have shown something else. And what you want to see is that when it occurs, the MACD and stochastic are not confirming. In this particular instance, the MACD and stochastic are confirming that bounce. I should have done this. I was busy with the program, so I didn't actually do it. Normally, I'd be typing these things, even if it's just a 2-minute chart, left side, right side, price, time match, the cup formation. You see, there's the inverted Y, or backwards Y. And now this is going to be very interesting. And if the stochastic at 92% starts to fall, this will come down. And if it holds steady with the MACD still good, you're going to break above this resistance line, target that left side high of 2387.75. Let's see what happens. Okay. So in the meantime, back at the ranch, what I was looking at is, first of all, Bob, you called the other day about Amber. We said take a little bit off of your options, but you could also put it back if it is the 9-period moving average, holding very well, up 9 cents AMBA at 56.92. Congratulations, you made a great call. Now, I'm going to go back to what I was looking at before. The XLF is the financials. The weekly chart shows very little strength, but it has formed the potential for a cup formation. But at the same time, I like to talk about 2 fighting patterns. You've got to talk about these things and know what you're looking at. You want to know what's the upside, what's the downside. So it's just real simple. Monday or Tuesday of next week, the XLF is at 23.94 right now. If it takes out $23 support, very negative action. If it breaks into the 24.30s, that's about 40. It's not a big deal. 40 cents higher, 24. Did I say 23? I meant 24.30s. That's going to be good. That's number one. Number two is, in this cup formation, what you want to see is the MACD start to move towards crossing positive. It can't do that unless there's a lot of price movement. But it needs to change its modus operandi of going down. And the green line, the faster moving average, needs to move up. And the stochastic has turned up. So you don't want to see a failure, and that's what would happen if there's a move below the 23-ish level, 23 support. That would be a failure, and say, be careful, you're going to be testing the low again. But if there's a move to the upside, that's going to turn everything up. The monthly chart so far is holding very well, but it is at peak D. All right, so now let's just look. Maybe we'll look at Goldman Sachs. Yep, so they all have the same pattern. Goldman Sachs, Citibank. Citibank's actually one of the stronger ones in pattern. Oh, I forgot to look at that. That's peak A, peak B, subordinate A and B. Hey, this is acting way better. This is one of the better looking. Yeah, this is Citi is one of the better looking banks, chart wise. I don't know if it is one of the better banks. So that's very interesting. Make it real simple. I'm going to go back to the XLF. The XLF. Oh, so you would like to know, do I buy or do I sell? Oh, man. With the risk coming up Sunday night, I'd rather have the trend in place. I don't mind if it gaps up and the XLF is showing that it's working because the TNX is going higher. In other words, the TNX is broken out and it's going into the 24s. It's at 23.65 right now. That, by Monday or Tuesday, everyone will say, hey, yields are going back up. Watch out. And that's what I'd be looking for. So that the answer is, you could start a position now if you wanted. I would prefer for you to have patience. But if you want to start, WFC trading at 55 right now, I would just have a small. If you're prepared to take a 2-point loss quickly, you're getting in now. By Monday, you're already stopped out. Fine. Then WFC. Actually, out of chart patterns, I think the one that's more mature is Citi. And it's trading at 60, but it doesn't matter. Either one at 60 or 55, you could have a 2-point stop if you wanted. My thinking is I'd rather wait for the trend to form, because if it doesn't work and all of a sudden the XLF, and then this could happen, starts to go back down, you've got that pattern that says, uh-oh, the technicals are going to falter. To tell you the truth, I think it's like yields. I think we're stuck in a range, and I wouldn't be surprised if we just keep chopping in the range. Okay. Next question was GIS. I haven't looked at for a long time. General Mills, oh, look at that. Big spike today, up $1.77, hit 60.21, closed the little doji candle low yesterday. Oh, that's interesting. Of 56.05, hit 55.67, and out of the blue, there's some news. I don't know if it's earnings or whatever, or if takeover. I don't know what it is. The chart in the weekly and monthly is just horrible. But if you want to treat it as a trade, hold off for a couple of days, and then you might have it as a defensive trade. And then I'm just do this what I always do. I start off with the biggest boundaries that the stock has made. It's giving me clues right there with a slight upside bias right now. And then within 2 weeks, I'm probably going to narrow this considerably and say those are the outer lines, but the inside lines are really what you're going to look at. And the inside lines could land up at 57.80, could land up being at 59.20 and 55, just under the low, so call it 55.30. But so all I'm saying is I don't know what the news is, but it means the defensive stocks are trying to get a player. Look, Procter & Gamble, big deal, up 31 cents, under the 200-period moving average. I don't see anything yet. Peak D in the monthly. Just be careful there. Okay, now the next thing I want to look at is as a dividend play, I'd be real careful just for another few days about the dividend plays. And I'll explain why. If you remember, I spoke about this Chevron and Chevron and ExxonMobil, and I said I don't want to have the risks of the downside over a 4, 3.5, or even 4.5% yield. I mean, it's just not worth it. And both of them are struggling. Look, CVX down $1.55 at 105.17. ExxonMobil, let's see, holding quite well. But if we kept doing this for another few months, just trade between the 83.5 and 80 level and just keep chopping, I'd say great. I think we're about to see the test of the range in the next couple of days. So have patience. I will be talking about dividend stocks next week. But look, we said be careful with the Verizon's telephones. We had telephone. We got out of it. I said not a chance. Had a fabulous move up for about 8 months. Got out. went in just once. I think we took a little bit of a loss, no, maybe a little bit of a gain. It was very small. Then we were out, and I said, no, I don't like this action at all. And look at it. Look at telephone, 38.03. It was back in the 40s, holding for a long time. I don't want that kind of risk. Not if you want. Look, you're buying a dividend stock for the safety of the dividend. Why would you put the unsafety of your capital at risk? Now, I have a different view. I'm sorry. I'm going to have to just say, hold off for now. We will be seeing next week a pretty good chance of what's happening in the dividend play. Okay, so that takes me to, I wrote it down. So did that crude oil, I did left side, right side price time at, Disney. Well, I had this as a short 2 days before the top at 114.21. It hits 116, then takes us out because I had a really tight stop. And now it's trading. Today it hit 109 something. That's the way it goes in this business. You can be correct in your analysis, but the trade is the trade. And I missed that one, and I was going to get back in, didn't get it.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Great programming coming up, folks, all the way to this evening, where you've got Andy Heck. So this is the left side right here, red. And this is the right side green, and we've done it. We went exactly to the penny, exactly to the 25-cent level of the left side, and now we start to turn down the under the 9-period moving average on the 2-minute chart. See, right here, left side, right side, used that doji as a midpoint. That was the plumb line, worked out exactly, went right to that bar. Now what we're looking at is the stochastic's gone back under 80, and that MACD. If the MACD goes negative, be careful. There could be a sudden slide. Okay, so what I'm going to do in this last remaining few minutes is I wanted to talk about, I had a question about Vail or Valet. Sharply down. I've been recommending be careful in this area. Remember, I said my TRCCI, this is the, not mine, but it's the Thomson Reuters equal weight commodity index. It's just on its way down. It's turning down. So this coming week has to see some kind of a V-shaped turnaround to the upside. So as I'm looking at this, I just don't see anything in those commodities. The reason why I took CX, even though it's not a commodity, I took it off the list because CMAX, it's kind of in that area of the ingredients that you need in the whole commodity type sector, and it's a Mexican cement company. So just be careful right here, okay? Just another couple of days, and then I think we'll have some clarity. But for me, I wanted to show you this. That 5 says that you could have a new move to the upside. But the way I calculate this in the Chapman Wave methodology of the Chapman Wave 5s is that if I turn out to have over the next 2 days or so to make that an X, that would start a brand new move to the downside. And that's true. I'm not doing it just yet. I'm saying I have to have a little flexibility here. If it wasn't for the news on Sunday night, and don't forget, Tom's doing a webinar right at that time, so check the front page of TFNN. If it wasn't for that, look what would have happened. I would just get a right shoulder failure over here, and I'd be looking and saying, you know what, next move by Wednesday of next week. If we break the most recent support of 20,383, where do we go short? The exact penny to the bottom, 20,874. Yeah, that was it, that day. That was I said if it hits that number, then we should start our short position. We've got a little flexibility here, but I don't want to mess around in case it doesn't go our way. So I'm just saying all the ingredients are there to have a move down and finally have the NASDAQ join us. So as we're about to wrap up, there it is. That's the pattern. I just did live, real time. That's the pattern. It did a perfect left side, right side price time match right there, going to right there. And now we're pulling back. And I don't know what the news, I don't care what the news is. This is the pattern that said there's another left side, right side price time match right here that by, oh my God, right by now, 11:58 by 2-minute chart, by this moment right now, we should be getting close to the left side low. I don't know if we'll make it, but I'm just saying, isn't that interesting? The left side low of 23.8125. Hey, the day is young. We've still got another couple of seconds. So all I'm saying is keep in mind the chart patterns they really do work. And if the chart patterns are suggesting that the QQQ series is becoming a little bit vulnerable, that there could be upside, but within a very short period of time, we could be seeing a much greater percentage to the downside. It just says be careful. If the top IBD stock gets smacked 28%, we're in a highly vulnerable area. And I've spoken about all these different things. And I spoke about, Amazon, Amazon's made a peak E, it's struggling here, made a leg F. I'm calling it for now leg F in the weekly. Be careful. That's all I'm saying. We could move to the upside, but be very selective. We're going to start moving nicely to the upside, but boy, it's selective. Have a great day. I'll see you tomorrow. Thanks for being here. Check out my opening caller. You'll find it instructive and hopefully very beneficial and profitable. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.